previous
than this
weeks,
past
other
week.
than this week's. Yeah. And like when anything else, like, really bad is going on in my life. But
Right.
all the other days,
All the
Darryl,
other days you wake up going like, hey,
I'm
today's going
feeling
to be the day.
fantastic. Yeah.
Yeah, that's good. Can
Okay.
I tell you a story?
Go.
Or do you
Tell
want to
me.
tell me a story? Do you have a story for me?
Buddy, I got stories for days. What story do you want? But tell me a story. Come on. My
So
life is a story.
your life is a story. That's why
Yeah.
I'm intrigued. I'm intrigued. Your story's probably better than mine.
Let me hear.
So I'm looking at this property,
Mm.
and everything I do, every number I crunch, every drawing I make, it's like grand slam deal, right? And I'm like, oh wow, this is great. I'm gonna hit another grand slam so soon. Lucky me.
Yeah.
What's gonna be wrong with this thing? What's gonna be wrong? And I'm going to my wife, hey, I don't know. This thing looks too good to be true. But I've said that before, right? And so I'm getting all excited. And TK, I'm drawing like 4 high-rise buildings on this property, and I'm getting crazy because it's already starting at like a 6 cap, which, I mean, in years gone by would have been enough to just buy the damn thing, right?
In this market, that's like bare minimum.
So, but I have a plan, and I'm looking at it, and I'm like, forget it. Like 6 cap's great to start, but like, wait till you see what I'm gonna do with this thing. And I'm getting everybody all psyched up, and then TK, it's in the middle of a floodplain, bro.
Oh, that just happened to me too.
Oh, just disgusting.
But those floodplain maps though, like we're gonna the site that I told you about, we're fighting it.
Well, see, this was my thought is like, I wonder how long it will take to fight this and to correct it. But part of the correction in this case is to like change the culvert under the 401. So, I mean, it's not happening likely in my lifetime, right? But okay, so first thought is, expensive and a lot of time and a lot of red tape, right? But then I start to think like, remember when Trump took over like the skating rink in New York, and he like just went in there and like for a fraction of the public budget, he like built it, and in a fraction of the time. And I was like how I could probably organize like changing this culvert pretty quickly and pretty simply without shutting down the 401 for too long, right?
If anybody can do it, Darryl, it's
anybody. but so anyways, it's like these are the things that I'm looking at these days because I can't find a good deal, TK. And
I'm halfway on the one that we've been working on, by the way.
Halfway?
I'm halfway. Yeah.
Which one? We're working on a few.
The corner one that no one else is working on.
Oh, good.
Yeah, so I'm halfway. I'm not gonna. I don't. Yeah, so I'm not gonna tell you until I have at least 3/4 of the way, or like 2/3, and then I'll be like, all right, Darryl, I'm ready to go.
Well, it's a good thing that you need 100% for the assembly. So basically, anything under 100%, it's basically not a deal. But
that's why I'm not calling you about it yet.
Yeah, don't get me too excited because you know me.
Yeah, but things are good. Things are good. So I sold that house that had all the stuff in it.
You did?
Yeah.
Oh no.
Yeah. So it was good. It was
like land value, or somebody thinks they can actually salvage that place?
No, it's fine. In fact, they even brought in a home inspector to look at the structural integrity of the home, and it all confirmed. They had an appraisal. It's good. It just had a lot of stuff in it, really.
A lot of stuff in it.
A lot of stuff in it. Yeah. So
I was in a house once in Hogs Hollow that they wanted to do a renovation, and there's this old back split kind of bungalow, beautiful property, but they were 100% certifiable hoarders. And super organized hoarders. So they had so much organized stuff on so many like industrial shelves, not even shelves, like racking in some rooms to store stuff, right? But like super organized and meticulous, but books, heavy stuff, lots of books and lots of computers. But the house was caving in on itself. That was like renovation. Like, you guys need a wrecking ball. Forget a renovation.
So I sold a house to a client, right? And there was a tenant, And she was nutty the whole time during showings and all that kind of stuff. And it was just like, all right, like this
What's
is a bad
nutty
situation. Like she was just like aggressive and had a lot of conspiracy theories and talked in funny ways and lived in a hoarder type of situation. And the situation with the client was there were no other options for them in their price point. So this was like the only entry level that they could get into in the area that they wanted to be in. So we bought the home. The sellers served their notice that they were supposed to do. The tenant ignored everything. So we assumed the tenant with the notice already been filed. We went to landlord tenant board. The tenant didn't show up. We got an eviction order. She didn't respond. The police got involved. They physically removed her from the property and all her stuff. Well, they have 72 hours to come and claim their stuff. And her social worker's calling us and all sorts of stuff. She's like, she doesn't have any way to get it. 72 hours goes by. I think we gave it a couple more days. She didn't come and get all her stuff, Darryl.
No
So we had a
kidding.
house full of hoarder stuff, house
Right.
full of things. So we get some bins and I don't know how many bins, trucks, all that stuff. We're dumping everything. And she's got all this, when you said organizing computers and all that stuff, she's got all these Rubbermaids in the basement packed and they're heavy. You know, I remember throwing up my back on these things and we're just getting rid of them and all this stuff. And I'm going through them and everything else. And she had come by the house and said a few things. What she did was she felt that they were deleting the information on the internet. So they were printing things, they were posting stuff on the internet, but then deleting it so that you wouldn't know that it existed. So she was printing all the pages from the internet, and every page that happened, she printed and she stored it in her Rubbermaids. And she had boxes of paper. It was heavy as rocks. And these were in there. And that's what we had to move out of there, was her data storage of the internet and magazines. Right.
Yeah. Yeah.
Oh, my. I was happy. They renovated the house. It looks great today.
Hopefully they didn't like ruin the structure. TK. It's an exciting day. We've been trying to get today to happen for a long time. And by we, I mean me. Good things
come to those who wait.
Absolutely. Yes. And we both know that patience is a virtue I have complete control over.
You have a little bit of it.
I have a little bit. So without further ado, this is probably our at least most followed guest of all time. This episode is brought to you by Landlord.
This Landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer. I'd like to welcome to the show the one, the only, Mr. Steve Saretsky.
What's up, buddy? You got the Vancouver background going too.
Look at that. Neither one of us has actually been there, but
neither one of us have been there. But I feel like
we're missing out.
I feel like we're missing out. Meanwhile, you're coming here soon,
man. That's fucking wild. I've been to Toronto like a dozen times.
I feel like it's not worth taking up a vacation on.
No, brutal. In the summer, it probably is.
Maybe, but like I'd rather go to Mexico.
Look at that. It's like we don't have anywhere else like that in Canada, with a big city surrounded by mountains.
I feel like I'm there right now.
If you're a skier, it might be worth it in the winter.
Yeah, I had an interesting skiing. I knew how, but I kept falling. I have a good skiing story, but for another day.
Let's give a little introduction. So Steve, thanks for joining us. Nice to meet you. I'm assuming all of our listeners already know who you are, but if they don't, Steve's got his own channel and he's one of the hosts of the Looney Hour. We got a big special announcement today.
Stay tuned till the end of the show.
Steve is, well followed on multiple social media platforms. We'll give him a nice plug there at the end, and check out his channel. Link will be posted in the comments. Thanks for joining us, Steve.
Beauty. Thanks for having me on.
Today we got a special show. Let's just talk quickly about what that is, because we're going to do it at the end. But we've got an extra ticket to the Looney Hour live podcast at the Hockey Hall of Fame.
Boom.
We are giving it away to one of our commenters from the previous two videos. And Steve, you are going to be the one choosing the lucky winner of that ticket at the end
You
of the show.
You get to choose from the top 5 list of
That's a lot of pressure.
Comments.
It's a lot of pressure, and we're taking it off of us and putting it on you. So
we know you're good under pressure, Steve.
Yeah.
Let's do it.
Awesome. All right. Well, let's get into, I mean, you talk about the Bank of Canada a lot, and they're certainly in the news once again. If you follow your Twitter account, you know that you are definitely in tune with what they're doing, or at least as in tune as someone can get. What the hell are they doing, Steve? What's going on?
I mean, I think I've had like central banks. It's funny. I mean, I'm obviously getting, ragdolled. I think this year with the comment section, just on, oh, this guy said rates couldn't go up, and I think so. I'll be the first to wear. Yeah, I wear that one on my face for sure. But I think I think I've had these guys pretty much dialed in for the last, since I've really been chatting about them for 6 or 7 years now. But yeah, I mean, long story short is I didn't think they'd be able to get this amount of rate hikes, and I don't think anybody did, right? I mean, if we go back 12 months and ask anybody where rates would be, a year from now, nobody had this. Even the big banks. I think Scotia was calling for 8 rate hikes this year, which would have been an overnight rate of about just over 2%.
Yeah, so everybody thought, quarter points, 8 times.
So, yeah, I mean, I think they called inflation transitory. They called the housing boom transitory, and they missed it. And now they're trying to sort of save face. So they're trying to regain some credibility. I don't know how much credibility they actually have left personally. But that's what they're trying to do. And I think I mean, you guys probably see it over in the GTA, but people are like, oh, they can't raise rates. Well, they can, but the collateral damage, I think, is going to be pretty extreme.
Severe.
And yeah. So I think the housing market, I still think, is weaker than these policymakers are probably aware of. And I think it just takes time, right? I mean, we've only been in a correction I have to remind people, we've only been correcting for 8 months.
It's so funny that you say that, because I was thinking man, this is going so slow. What is taking so long? Just get it over with already. But yeah.
I mean, I know home buyers are thinking the same thing. They're like, yeah, prices are down, not down that much. What's taking so long? Again, it's been 8 months, and your national house price index is down 15%, which is the steepest decline on record since it was made in 2005. So it takes time. I think you guys probably know some of the risks that are in the system, private mortgages, people renewing at 5.5% mortgage rates. These are going to take time to happen and renew through the system.
That's the biggest issue I see coming down the pipe, is people that are renewing from, even a respectable 3% at 5.25%, 5.75%, even maybe 6 something. They're going to raise again in a couple of weeks, right?
I'm seeing the biggest one is the private side, the private guys, because everybody a year ago was getting 8%, and now they're getting 12+% with 2% fees, 2% broker. So they're just whoa, wait a second. And they were already vulnerable people because they were getting a private mortgage a year ago. So pretty much all of those guys are going to market now. They're
and you got a lot of people on the B side too, the home capital groups and all that other stuff that, I'm sure people, when they sign up for home cap, aren't planning to be there for the long haul, but pretty hard
even
to get
if you wanted to. I mean, they're always 1-2 year.
The market bailed them out the last little while, and that option's not there today. And the lenders don't want it. The private lenders that I'm dealing with on all client fronts have all said the same thing. We're not renewing. Our money's allocated to another investment, is what they're saying, because they're getting better interest elsewhere
than this shit.
So they're we want it back. Figure it out, sell or be sold.
Well, and you touched on Romspan a couple of weeks ago.
Yeah,
man, they were so strong a couple of years ago. You wouldn't think that there'd be a run on them like that. I don't understand.
Yeah, and I mean, one of my buddies who's in the industry, he mentioned too. He's like, take a look at it, right? He's like, they're lending on loan to value, not on loan to cost on a lot of their construction projects, right? So that's the one sort of caveat, is nobody. What is the loan to value in today's market?
What's the value?
Yeah, exactly. So these guys are obviously, they kind of tell, oh, we know we loan to value when we have low loan to value ratios. I was like, well, do you?
Yeah. It's
when was that value?
75% LTV based on a dream idea.
Exactly. So I don't know. I think like there's more dominoes I think to fall in the new year, but like I said, kind of like once it gets going, it's pretty hard. It's harder to stop. So I just think like again, I think for the Bank of Canada, I think they're gonna have an oh shit moment. You know, early parts of next year. But it's funny because everyone's like, oh, this is what the Bank of Canada wants. They want house prices. No, they don't. No, they don't. These guys work for the big five Canadian banks, and your real estate would, you know, your mortgage, while it might be a liability to you, that's the bank's asset. And the Bank of Canada works for the big five banks. And the big five banks, in my opinion, are the real people running the country. So, and that might, and that just, I think that is just the reality of the situation, which nobody maybe wants to believe or accept as the truth. But I think that is the truth, and the truth hurts sometimes.
Steve, you're in real estate. You're a real estate agent.
Yeah.
You're not like any other real estate agent that I normally meet, right? Like, what is it about the economic side? Like, what is it that, you know, got you into, you know, your channel and, you know, studying all these policies and stuff like that? Because these aren't things that they're teaching in real estate school.
Yeah, that's funny. I've heard that a few times. People are like, why are you selling real estate? I don't get it. I love finance personally. I think it's like a chess game. I think like macroeconomics, you know, like these guys, think about it. These guys set the price of money.
Yeah.
Like that's the most, that's the, like, that's like the biggest job I think in the world. And like, and if you think about it, like 90, what's your guys' guess? I'm going to say 90% of Canadians have no idea who Tiff Macklem is.
Or what the Bank of Canada even is.
Yeah. Like I chat with normal people day to day. I chat with like a lot of my clients. They're just normal people. They just want to buy a house. Like they don't really know what the Bank of Canada does day to day. They don't know. So I just think it's really, really fascinating. I've always been kind of intrigued by like the world of finance and trying to figure out like sort of how to maximize your investments and build wealth. And I think like you have to kind of know really how money is created and who's responsible for sort of pulling on the levers. So yeah, I've just been always fascinated.
That's your passion. And this is
Isn't
something
it-
that you've just
cool.
been committed
Isn't it
to
kind of
learning.
crazy though that there is this mechanism in the marketplace?
That's crazy, right? I mean,
Right?
like you know, I mean, I don't know, like when I got into the housing market originally, like back, I mean, this is coming up year 9 for me. You know, I was a young guy and was just trying to figure out like what made real estate prices tick. And you know, you just kind of go down the rabbit hole, and I'm a big sort of self-taught person. I like to read books and buy subscriptions and just learn from smart people. And yeah, you just look at interest rates and see how they influence like people's largest asset class. Right. I mean, how many Canadians? I mean, that's everyone, like the wealth story in Canada is buy your primary residence, pay it off, and then one day you sell it and downsize, and that's your retirement. That's your nest egg. Like, so you have like one asset that is like responsible for
your kids become inherited millionaires.
The empire.
40 years later.
Yeah.
And
what
people
about
get
the YouTube-
lazy.
What about the YouTube side, Steve? So like, how did the YouTube journey go with you? Like, I mean, you've been on YouTube for a while now. You've been talking about this. When did you shift from like local Vancouver market reports to like national housing policies and Bank of Canada updates?
Yeah, maybe I was a little bit more micro to begin with. Vancouver, I just figured like the channel was kind of expanding. Like you could see people in the comments like from Toronto and from different parts of Canada. And I think like it was just important to sort of get out of that. Like I kind of wanted to be bigger than just Vancouver as well. Like I don't know. It's just, there's only so much to talk about. And you're only talking about like your one like city. It's like, I don't know. It's not that, to me, like I said, like I love macroeconomics.
Especially if you like macroeconomics, like sticking to one city is going to be pretty dull.
Just, I don't know. It kind of kills you inside. Like, you know, you got to look at how the world is moving. Right. And like, so like, what's the Fed doing? I mean, they drive really central bank policy around the world. So, you know, if you're only talking about Vancouver, you're kind of missing the forest for the trees.
So how did you even like I know I got into macroeconomics by accident because I got killed by them back in 2008, 2009 when I wasn't paying attention to them, because I think the guys who were paying attention saw all the signals and did what they were supposed to do. I like to think that I behaved that way this time because of last time, but like, how did you know to get into the idea of macro? Like, where did you take it in school or something?
No, I just it's funny when you said that. I heard actually I've had quite a few conversations with like other people over the years, and they told me the exact same thing. They're like, I got interested in macro when I got obliterated in 08 and 09.
Pummeled, bro. Pummeled.
Yeah, and like a lot of these guys are like, big real estate guys, mining guys, stuff like that. So it's really it's fun, it's funny, right? So no, I don't know, man. I just like literally like one of like my gateway drug was like I was like one of the early guys in like Real Vision, which is like I subscribed to Real Vision back in the day. It was expensive back then. They've lowered the prices like dramatically, but I was just like, you're sitting down, you're watching like interviews with like Grant Williams and like Kyle Bass, and like I don't know, it's just like I said, it's kind of like this chess game, and so I always found it was interesting. I just kind of started there. Honestly, it's all self-taught, so I don't try to claim to be an expert. I'm just a guy that's learning, but I try to pay for good information, right? You try to learn from the best. And today, like you can subscribe to anyone. Go on like Substack, and there's like, like Doomberg, like he puts out a thing for $20 a month or something, or like, Real Vision's like $200 a year. And there's just so much good content you can learn. Like you can go on, what's crazy is like, you can go on Twitter, and there's like some of the best like portfolio managers, hedge fund guys, people that have been like the most respected people in the industry for the last like 30 years. You can just like follow them for free, read all of their information, all the charts they post for free, reply to them. They'll reply back to you.
Yeah.
And it's free.
It's free. Yeah, no, it's crazy. I've met some unbelievable contacts through Twitter. That's for sure. I've also like definitely got more gray hair and lost a few hairs over being on Twitter.
Oh yeah, you're telling me.
It's a dangerous place. But
listen, it seems like you've got the skin that's thick enough, because you're obviously continuing to do it. And we know from our little channel the type of comments we get, and you're getting more views, more comments for a longer period of time. So you've been able to deal with that well enough to carry on the message and follow your passion still.
Yeah, I think like people just like, you can be like the best person on like social media. You could have like the best well intentions, and people always are going to hate you. So when I don't know, some of the people okay, so just give you an example. Pick like Tony Robbins, for example. Okay, so like I think he's set out his life to like help people be better, like that, like helps people their mind. Yeah, like I think he has a genuinely good heart. Does he make a lot of money? Yeah, sure. Like, but he's providing value and he makes a lot of money. You can still go in some of like his comments and stuff, like on his social channels, and people are like, this guy's an idiot, this guy's a scammer, this guy's a scumbag.
Everybody. Oh yeah.
And you're like, man, if this guy's gonna get it, like it doesn't matter who you are, like you're gonna get hate comments. It's just the nature of social media.
For sure.
And what's the backstory on the Loonie Hour? Was that an idea you had for a while, or is that just sort of like us starting a podcast during the pandemic?
No, so that's actually, well, okay, so you guys would keep talking about like macro and all the other stuff, and like I said, I like macro. I think macro. I think I have a decent understanding, but I'm certainly not an expert. And so, it was always interesting. Like because I've done a couple interviews for Real Vision, and some of them were with Keith Dicker, who's the co-host. And so Keith and I are like, hey man, like, and I've actually been reading his macro newsletters for like the last 5 years, because he puts out like one a quarter or something. And I was like, oh man, I was like, we should like do more of these interviews. And so him and I decided to start like this, like a Canadian focused kind of podcast. And then like Rich just like randomly reached out and was like, hey guys, like, can I join your podcast? And it was like awkward. We didn't really want to say no. Like nobody wanted to say no. And we're happy that we brought him on, obviously, because he's been like that I think important third piece that really makes like the banter.
Yeah.
And he's a smart dude.
Yeah. Didn't he move away from, is he no longer in Canada?
Well, yeah, he was working for like a hedge fund in the UK, and then he moved to Canada for like a relationship here. So he started up his own shop, because obviously in Canada, like it's not really the land of economic opportunity. So it's not as much hedge fund jobs in Canada as are in London, obviously.
Mm-hmm.
So he started up his own boutique research firm, and now he's actually just moved back to London. I think he's gonna get back in the hedge fund game. So,
Well, and now he's coming to Toronto on the 2nd.
yeah. And then
Look at
Keith's
this.
obviously been running a portfolio for, I don't know, 20 plus years. He's got runs a hedge fund as well. So, guys that are actually like in that space day to day, I think they provide like a different perspective than myself, who I think my expertise day to day is really in real estate, and macro is obviously just like a hobby of mine.
Nice. So what's going on right now? Federal government, we got like an anti-flipping tax. We've got like foreign buyers ban. We've got
They just lifted like a strata rental baloney out there. What's that all about?
You guys want to talk about that? I think there's actually an important piece, because the only reason why I say that is because I know it's like a Toronto show, but you guys, it seems to me like Ontario follows BC.
No, we test things. We were talking about that on the
BC tests it for us, and then we go, you know what? Yeah, that's not bad. And
we test
whether
it
it works
out there
or not, we follow suit. Absolutely.
Yeah. So yeah. Anyway, so the premier, David Eby, I think I like him personally. I mean, but I mean, I'm not a huge NDP guy, but I think David Eby is a good guy, and he's come out and he's removed all rental restrictions in stratas in BC. So like, doesn't matter what your bylaws said, we are now removing that. We want to free up more rental supply because rents are up double digits this year and we're sub 1% vacancy, whatever. The big thing here that the media has missed or hasn't talked on is, and I think Ontario's similar. Okay, so I know you guys have an empty homes tax. So in the city of Vancouver, we have an empty homes tax. And then in the province of BC, we have a speculation tax. And that speculation tax is basically the same as the empty homes tax. It's just spread out across all of BC. So the empty homes tax in Vancouver is 3% per year if you leave your home vacant. And the BC speculation is 2% if you're a foreigner. So if you're a foreigner that owns real estate here and you don't utilize your property, you're paying 5% a year. Huge. Now, when people go to make their annual declaration to the city of Vancouver and then to the BC government to say, hey guys, I don't have to pay the BC speculation tax. Yeah, I've got a vacation property here, but my strata restricts the rentals. It's, they're maxed out. So, I don't rent it out, and I use my condo 1 month of the year. BC government says, okay, no problem. Yeah, we get it. You got a rental restriction. Now that you've removed all of those rental restrictions, it's going to create a scenario where people that normally would have checked the box to say I'm exempt because no longer have that option. So you will see, I think, quite a few people that will be forced to sell because they don't want to pay 5% a year. So there'll be some inventory that comes to market. I think that's the big story, because and there's going to be, I think, quite a bit of locals that are going to get caught off guard, as they always do, because they don't pay attention to these things. When they go next year to pay for their empty homes tax and make a declaration, they're going to get hit with a huge tax.
Interesting. I mean, are these the vacant homes tax on its own? Is that something that's been effective? Like, is there any data on that, on how much revenue's been collected?
I mean, I don't have the data on the top of my head. I remember writing about it, but the long story, like the short answer is it's freed up some rental housing for sure.
I was going to say, aren't people going to rent their houses more now?
Yeah, like you'd see, like, okay, so like, $4 million house on the west side, maybe, more of a foreign owner that doesn't really live here.
Parkinson, like maybe.
Yeah. What they would do is they would like the big part of the house would be empty, but they would rent out like a 1-bedroom basement suite to like some like student, and the student would basically pay like low rent, and they basically would just watch the house for free.
Cut the grass.
Maybe.
Pretend.
Pays the Wi-Fi bill.
Yeah,
that's so
so like, yeah, I mean, so in that essence, like, I mean, they did free up a basement suite, so I guess that helped the rental stock a bit. But in reality, it's like they're making all these like tweaks kind of around the fringes, but in reality, like nothing has changed. Like rents still went up. There's still sub 1% vacancy rate. Like it's still, if you're a prospective tenant, it's still really hard to find a place.
So, but if you own a place that you leave empty for 11 months out of the year, is this 5% really changing things?
I think on $1 million, it's $50,000 a year.
Yeah,
I
I think
mean,
it's a factor. I mean, whether it's a big factor or not, I know that argument that Daryl made is like if they're already negative cash flowing, or they're already having this much expense or
So
whatever. What's 1% more? But 5% significant.
5% is significant.
Sure.
And I know, I can tell you, like, I don't really work with like many foreign investors. It's not really, I mean, I speak English, so I don't have that ability. I know for sure it's deterred people. They're like, I want to put money in Vancouver. I like it. I want to park it here. It seems like a great store of value. But then you're like, okay, well, you don't want to be a landlord. You just want to utilize this property like every so often. Like it definitely has deterred some people.
So go to Ontario again. Is that the answer? Like, wasn't that the answer in 2000? What was it? 17?
Yeah.
Go to Toronto, go to Ontario.
The big
I mean,
sort of thing that I think people get caught up in. Again, maybe people don't care. I think that if you're, a BC taxpayer here, you're paying taxes, and like we're going to see people with like vacation properties. So like you live in the city of Vancouver and you have, I don't know, a home on the lake, hour from here, 2 hours from here, because they just expanded the speculation tax. Like I think one of them is like Cowichan Lake. So that's like on Vancouver Island. Like obviously you buy on Cowichan Lake to like not live there year round, like, and you're not going to rent it out. Like it's a vacation home. It's for you and your family to go and enjoy, 3 months out of the year. And so like that would now be subject to like that speculation tax. So I think the government says, well, even if you're a BC taxpayer, and you're kind of doing everything above board legally, well, you own property in Lake Cowichan that's only being used 3 months out of the year, not 6 months like we want it to be. You should be renting it out, or you can pay. I think that for BC residents, like 0.5% a year.
Yeah,
so that was more like a cash grab to me.
Yeah, I think it's a cash grab. To me, that I think that is wrong.
That's an easy one though. That's easy. What are they going to do? They're not even in the country, most of them anyways. They just own a second house here for their students who have a condo down in Vancouver.
Oh no, but I'm saying like if you're like
just
local,
a normal person that has a cottage, you're fucked.
Yeah. So like some of these guys bought these like 20 years ago, right? There's like, family cottage, like, and like, so a lot of those are going to be subject to the speculation tax. I think that's wrong. It's like
more than the property tax.
Speculation tax. You're telling me these people are speculators? I bought a cottage 20 years ago for the kids to use in the summer. Like, I don't know if I wouldn't call you a speculator. So I don't know. I mean, it's classic politics, right? Like it is what it is.
I find more and more evidence of policy being made by people that just don't think things through all the way. Like, and I don't think it takes real genius to really see some of the outcomes that are possible from some of this stuff. But it's like, it's just mind blowing because the effort to get these things through is like, they're no easy feats to get these stupid policies through. Right? Like,
yeah.
It's not like one guy just signed something.
They change the rules. Like in the 70s, they had a speculation tax, right? Where you actually had to pay a tax based on your use of the property. Now the anti-flipping is like, okay, when you sell the property, you're going to be taxed as business income on all your gains and stuff like that. I think the only taxes that stay, from my experience, are ones that target foreigners. Anything that's local, it's an election issue. People vote on those things. So someone will run on the platform of, we'll get rid of the speculation tax. And then that will have to be removed once governments change. But the foreigners, it's the easy target, right? Like, it's the foreigners' fault. Like, and so I don't think that these non-resident speculations tax are going to go anywhere. But I think that anything that affects locals, I believe would be temporary.
So let's do a recap. So we talked about macro to start the show. So just to give you an example, so in here where I am, and you guys are similar, we've got City of Vancouver empty homes tax, BC government speculation tax. We got a school tax. We got huge property transfer taxes. We've got basically a restriction on Airbnbs. Those are essentially not allowed. There's so much government policy red tape, and yet house prices continue. Basically, over the last 3 years, 4 years, you got a foreign buyers tax. They basically can't buy real estate here. And then in 2023, you're going to have a foreign buyer ban. We brought in so many policies, and yet house prices have still ripped, and rents are still ripping. So it's like, again, and then you look at the macro, it's like, well, we lowered rates to 1.5%. Mortgage rates got down to 1.5%. The banks created a whole bunch of credit and flooded the system with a whole bunch of money, and house prices, in parts of Vancouver, parts of BC, Toronto, they've doubled in 4 years in some of these markets.
Mm-hmm.
Well, so it's like, I don't know, are these policies working? Like I said, I think you're working around the fringes, but at the end of the day, it's like macro trumps all. And the macro is people want to park capital here. Capital flows where it wants to flow. And if you drop rates to zero, money's going to go where it seeks a return. And it was into housing.
Well, and prices are dependent on the supply of money. However much money's out there, prices will continue to go up. We restrict that, prices will come down. And it's like, we got 8 months of evidence now to show that.
Right. And so now, okay, so you tweeted the other day that the Bank of Canada says 50% of all variable rate mortgages with fixed payments have reached their trigger rate. This represents 30% of all mortgages outstanding. So let's talk about that for a bit, because I think
13%.
Yeah, 13%. What did I say? Yeah, 13%. So is this a factor? Is this a big thing that's coming? Is this going to be a problem? Or is this
I think Desjardins put out a report that said anyone that basically took out a variable fixed payment mortgage during the pandemic, is all of them have hit their trigger rates. So, however you want to slice it, yeah, there's like a huge cohort of people. I think like this is more just like when we talk about it takes time. I mean, some people have only just hit their trigger rate in the last like month or two. And that trigger might only be, okay, let's just increase your payment by, $150 a month, probably manageable. It's more like, okay, what happens in renewal in 3 years? And they've got this like large balance because nothing's been paid down. It's an interest only loan. So I just think, and there's, I know there's been people that have been triggered. Now it's like an extra $500 a month, depending on your bank. Right. So you can pay $500 a month, but you're probably going to start cutting somewhere else. You might not go to the sports game. You might not go out for dinner at the restaurant. So I just think like all these things, when you have more and more of your money being serviced, you being used to service debt payments, I mean, it takes away from additional consumer spending elsewhere in the economy. So that's going to take time, right? I guess it's been 8 months. But I think people are cutting.
I definitely feel like things are getting tighter everywhere.
I found that movie. Remember there was that Jennifer Lopez movie where they were talking about the strip club and the girls knew the recession was coming? Darryl, you should go and do some investigative journalism and find out if people are still spending money. Would be the place to find out.
That would, I mean, that could be a leading indicator, I suppose.
Yeah.
Is that something that people still find the money for, regardless? I think like there's things that people still seem to find money for.
Full. I'm seeing restaurants full. I'm seeing movie theaters full. I'm seeing
people are still smoking cigarettes,
full,
drinking beers. Like people find money for certain things. It's funny, right?
The Looney Hours sold out.
Sold out in a week. Yeah,
people.
Yeah,
like,
something doesn't add up here.
People are going, right? People are going.
But there's still money out there. There's no doubt, and there's still a lot of people that are waiting to jump into this thing for the right time, which I don't know how the hell anybody could figure out. So, okay, sorry. Let me dial back for 1 sec, because you said you could pay for all these things, and I'm a guy too. I pay for all these opinions, and I pay for all these reports, and I pay for all this stuff. Is it more confusing? Is it less confusing? Like what? Like there's so many factors right now. Like you have trigger rates, and you have wars, and you have governments like spending money while we're trying to rein in inflation, and you have unemployment like not even really moving, even though they're really trying hard to crush it. Like all this info that we have out here from all these great people giving it away for free. Do you feel like you have like any like idea of what's going on right now? Or
I mean, I think the short answer is not really. I mean,
not really.
I don't think anybody.
Yeah.
I hate when like, you go on Twitter and like, YouTube or whatever, and everyone's like, everybody knows they know the answer. It's inflation.
Certainty, yeah.
It's the certainty around like house prices will drop 41.5% and inflation's going to 10%. Mortgage rates are going to 9%. I know, like, and they know with certainty. It's like you said about all these reports. the smartest people in the room in the finance world are some of them. They're arguing back and forth about what inflation is going to be next month. Are we going into a deflationary period?
Right.
Like there's brilliant arguments to be made from both sides. And I think the answer is nobody really knows. Only in hindsight do we know what the answer is. I think personally there's a very compelling argument to be made that we're still in, elements of a deflationary environment, which is like you still have a lot of debt, you still got really shitty demographics. Those are all your deflationary arguments pre-pandemic. And yeah, we're, changing supply chains and governments printing money, and yeah, technology is deflationary. So like, I don't know. I look at like all these crushing, debt payments around the world, not just in Canada. Like to me, that seems like if we're talking about a recession, that seems deflationary to me.
So
I like the reports, Darryl. I think just hearing
I like them too. I'm not. I listen. I spend a
just
lot of money on that shit, and
just getting the info and hearing these opinions, and like I want to hear the biggest bears and I want to hear the biggest bulls. I just want to hear what everyone has to say, because I think it gives me more information, right? But yeah, it's pretty obvious that when all the smartest people that you trust are saying different things.
Yeah, nobody has a fucking clue
knows
right
what's going
now.
on.
Well, look at I always look at like a guy, like I like him personally. I think he's been wrong a lot. Does it mean he's a stupid person? No, but like, David Rosenberg.
Sure.
He's been wrong a lot. He's been wrong throughout most of the pandemic, but like, I think he still makes some very, very valid arguments that like, I mean, he's a big debt deflationary guy, which is like,
but this is the thing, is things don't react the way they're supposed to right now. Like nothing works the way it's supposed to. And then when things kind of look like maybe you have an idea of where things might go, boom, war, big war, like crazy war, and pipelines exploding.
NATO's involved. NATO's not involved. NATO's involved. NATO's not involved.
Who can factor these kind of things in? And then what's next? Like Taiwan is at war. And then it's like, oh, no microchips for 10 years. Like figure that one out now. Try watching your YouTube videos about all this shit when no one can get a computer or a phone or a
confirmation biased ones. Right?
That's the thing, right? So I think, it's crazy. So I laugh. I like the haters. I mean, it tells you you're probably on the right track, but it's like, I think, the beginning of the year, it was like at the end of, maybe it was like, I think it was at the end of last year. And it was like Scotia came out with like the rate call, like 8 hikes. And I was like, that's a joke. That's never going to happen. And it was like 2 months later in February, like war in Ukraine, like fully happened. And like, oil shut off to like all of Europe. And it's like, okay, well, did anyone really have that on their bingo card? Come on, let's be honest.
Right. Like how?
Yeah. But then the other
Suez Canal, like who can call this shit, right? Like
dude, the Fed, the US Federal Reserve at the end in December of 2021, they put out like their rate, their dot plots, which is like where they think interest rates are going to be a year from now. So like the US Fed, I think, had their dot plots at like, they had the overnight rate at like 1 or 1.5% by year end. So they were basically calling for like four or five rate hikes.
Mm-hmm. They lied.
They lied. How many economists do those guys have employed? What's their payroll to try to like model where rates are going to be 12 months from now? And like they were wildly wrong. So it's like,
not whatever they're getting paid.
They got one lever or one dial, right? So it's like they're not going like this and going like, okay, maybe a little bit like this, and maybe like, okay, back a little this way, and they're going like, fucking crank this thing and then shut it off, and then like crank this thing. It's not going to work out well for any of us, is it?
Like Bank of Canada, man.
But now we got digital currencies in the States. Like that actually is a thing right now, right? Like it just started last week or just got announced. Canada's next. We know that there's a digital, what do you call it?
Digital yuan.
Juan, whatever the hell that thing's called. But that thing is like a coin now, or some kind of a NFT or whatever the fuck. Like what the hell, man? Like I just can't figure out anything right now. I feel like just so confused about what to do next. It's like, what kind of asset class do you invest in right now?
Well, everything. Everyone's like, all these geniuses that have it like completely figured out. They know exactly what's going to happen. Like,
Look at
dude,
Tesla and Bitcoin, for God's sake.
there's nowhere to hide, right? Like crypto's been decimated. Your 60/40 portfolio is having the worst performance in like 100 years. Which is like what everybody's basically in. What else? Real estate's down. Everything's down.
Pension funds are in like
Is there ever a time
triple
just not to
C.
buy anything? Like, is that ever like,
No.
but everyone always has to have a reason or something to buy, It's always like, no, now you got to get in here. And in hindsight, there always is something to buy.
But look at our original.
You should have bought US dollars. It's like, okay, sure. Like in hindsight, great. But like nobody 12 months ago was like liquidating everything they had and putting it all into US dollars. Like nobody was doing that. Okay, maybe one guy in like,
maybe Tiff.
Come on, like,
but hold on,
it's been a tough year, I think, for anyone that's been trying to sort of grow and protect their wealth.
Well, it's been tough if you worked at the BOC. Like, didn't they just get bonuses of $18 million or something while they also announced that they've lost money for the first time ever?
Yeah, and they're telling all the unions to not give people raises.
But who pays for that 18 million? Like, doesn't that
causes
somehow
inflation?
But doesn't it somehow come from us?
It's basically like an accounting trick, though, right? So it's like they're owned basically by the taxpayer. So like they go into like a net loss, and then so do you know, for example, like every year, like if they're making revenues, those revenues actually get paid back to the federal government. So it's kind of just like this accounting trick where like the money just kind of like goes around.
How do they make up for those losses then? Like I remember I read about it one time. So if they
honestly,
lose, because they're supposed to have a zero balance sheet, right? So where does that money come from?
Yeah, so I think I was watching an interview with Tiff, and he's like, "Well, you can basically like do an accounting trick to like defer it down the road until you get like revenue."
But they buy them up for cheap, and then they wait to sell them off until when they're worth a little more, no? And then
but then obviously because like rates have been going up, right? Which the value of the bonds are obviously falling in unison. So, hence the loss in their balance sheet. But I don't know. It's like,
who's checking their books? You know what I mean?
Like look at like the Bank of Japan, man. They own like half the government bond market, and like I don't know. It's just
still kind of trucking along,
and nobody's saying a word, right? So
what's to prevent them from one day owning like the entire government bond market and then just saying, okay, you guys don't owe us, don't worry about it.
Yeah,
it's just an accounting trick. It's a central
so, but
bank.
At some point, like there has to be a day where things come to roost, doesn't there? Like, can we continue? Like just continue this shell game for, I mean, I kind of see, they've been doing it for a while, but now it's getting like really big. Like it was like,
it's more of a confidence thing, right? That's all central banks are. It's just like people, what's the currency isn't really backed by anything.
Right. So, but how do you have confidence when they're fucking trying to kill everybody? Right. But it's easy to keep the confidence. Just, God, if they only raised it like the way we all thought that they should have, like a 1/4 point 8 times over 12 months, like it'd be not so bad or crazy.
So there are people out there, and I'm not in this camp, but there are people out there who are saying like this is the end of the empires that like we know it, right? Like this is like the Roman civilization falling apart. This is like the US dollar is no longer going to be the superpower. This is like governments are all going to be collapsing, because of what we've built up here. Right. But I feel like they have all the rules. They have all the tools to be able to just buy themselves out of whatever situation they get into. And there's really no repercussions. Right.
You just change the rules. I think like, I know where people are coming from. Right. But it's such a shitty way to live. When you're just like
to be thinking about that all day.
Yeah. You're just like stockpiling like gold bars in like your basement and like, it's all coming to an end. It's like, man, like how do you like go out and like make money and like run a business and like with that like mindset? Like, it just seems so depressing. Like, I don't know, like what do you do? Go like barter at the grocery store with your gold bars for a loaf of teach their own, man. I think, yeah, okay, if you want to have some gold, great, go for it. I've got a little bit, but like people that are like actively waiting for like thinking it's imminent, tough way to live.
Kiyosaki.
Well, but listen, let's say for argument's sake, okay, we're down 15% and there's people that think we might go down another 15% in the next, I don't know, 6 to 12 months. If we go down another 15%, like there's a lot of people, you have to go.
Go for it.
Oh no, but there's a lot of people that are gonna have a real tough time of it. Like I keep saying, like even the responsible people that put 35% down had a nice 2.5%, 3.5% mortgage, and now they come up on renewal at 6.5% on their $1 million loan. It's like, how many people are gonna go, or how many people are even thinking now, like, shit, maybe I better sell this thing before the value goes down too much. And then TK, you brought up a good point in the comment section, is like, what if there's no buyers for all these people that are deciding, shit, better cut bait now? Because I don't want to pay $8,000 a month for this fucking house.
I called into the bank yesterday, Scotiabank. No, it wasn't yesterday. Anyways, it was a couple of weeks ago, and I was like, hey, I was like, I got a variable mortgage on one of my investment properties. I was like, I think just curious, like if I can like roll it into a fixed, you know, like what I was like, just entertain the thought. I was like, just curious, what's a 2-year fixed mortgage? And she was like, oh, well, like we can offer you 6.13%. And I'm like, I was like, nah, I'm good. And she's like, and there was like a penalty on it too, because like you're converting, so you got to pay like 3 months interest. And I was like, well, do you think you could like waive that? Like, you know, can you waive that penalty? Like, you know, I'm a good customer or whatever. And she's like, no, trust me, we try. We had someone yesterday that did your exact same loan. You know, he was on variable and he converted to a 2-year fixed, and he had like an $11,000 penalty, and he locked in at 6.13. So I was like, my initial thought was like, yeah, but my initial thought was like, holy shit, like this guy clearly was in some sort of like financial panic. I think he probably panicked maybe at the highs, which was he panicked out of his variable mortgage, paid an $11,000 penalty to lock in at 6.13, which is like the highest rate in like what, 15 years? Like,
what's the variable at right now?
5.5,
5.6.
Like
I think just some people.
Is that what the posted rate is 5.6 right now, or
that makes sense?
Well, your prime rate's 5.95, I believe.
5.95. Okay, yeah. So
5.5.
So
whatever your discount is.
Yeah.
Just crazy. I mean, imagine those payments. Holy cow. I keep sitting here. I mean, I got to renew in 12 months. So I'm sitting here going, God damn it, 12 months. Are they going to drop enough, or where are they going to end up in 12 months?
What's your advice, Steve? Right. So we got a lot of listeners, and people are, you know, nervous about that. Like, what would you give advice to give to a client right now about buying, and either you go variable or fixed, or refinancing going variable or fixed?
I think it depends on like the person's financial situation. Like, how much capital do you have? What's your risk tolerance? Those are like the two big questions. So it's like, if you literally don't have like an additional, like if variable payments go up $300 a month and like that will break you, like you shouldn't be floating to begin with. I think if you got more risk tolerance, I would probably float it, or I'd go like a 1 or 2 year fix, which is what the market has been doing. If you look at originations in the last 6 months, they've all been going like 2 years.
Hoping that it'll be better in 2 years.
Yeah, I think looking at the macro is that CPI is coming down. Like it peaked, it's rolling over, it's taking time, it's a lagging index, and it's coming down. And the bond market's starting to sniff that out. I mean, the Canada 5-year bond yield is down 65 basis points over the last month. So I think it's coming down. I mean, like I said, the Bank of Canada is still going to raise rates here in December, but I think they're near the end. And I think more importantly, your fixed payments are coming down.
Did you feel like when they only raised 50 bips last time, that like things took off a little after that? Did you feel like there was a little rush out there? TK, did we feel that here, or was that in my imagination?
No, I don't think so. I don't think so.
Yeah, I mean, I think it definitely brought a little bit of confidence back to some buyers, but I don't think anybody like investors came in. Like the property I was telling you about that I sold, I had 4 showings on it. Like
No
no one
way.
wants to buy like investor type of, flips or anything like that. It's just end users out there right now who
Yeah.
absolutely need to move because they have sold already or they're, coming into the market for the first time. Like, so I don't think it really sparked anybody who was not going to be in the market, but maybe pushed people a little bit faster, helped them with their decisions, took some fear out of the market for them, right?
Yeah. Question now is where rates will be next year, and that's probably going to dictate where the market pricing will be.
So what is this next year gonna look like? Just everybody kind of waiting around still?
I think the spring market is definitely like a cohort of people that need to transact. I've got a lot of like clients that are in that situation, like they need to transact. So I think there'll be more volume. I mean, we're running at like what, 10 to 20-year lows, depending on the month for sales volumes. I mean, it's hard to do a whole lot worse than that. So I think volumes are going to improve. They'll still be weak, but the volumes will improve, and I think they'll improve on lower prices.
Yeah, makes sense.
How much lower? I don't know. Is it a couple percent? Is it like a slow grind, or is it like, do we get another 10% flush next year? It's hard to say.
It seems like the buying power from the buyers has directly affected the prices in Toronto. So if the buying power of the buyers gone down 20%, prices went down 20%. So to me, it's safe to assume that if the total buying power from the peak to trough is taken like 30% away because of the rate hikes, I think it's safe to say that that should be what the average price decrease would be. I mean, that's what we're seeing.
I was just saying the other day, like from a land perspective, my purchasing power has been just completely decimated, because where before, what I could do with $800,000 3 years ago, I could buy $9 million worth of property, right? Now with $800,000, maybe I can buy like $4 million if I'm lucky, probably not even. And that is a gigantic difference when you're trying to make money and you have to split up the pie a whole bunch of ways because you have, partners and investors. So like if I'm not alone. I mean, cash is king with everybody right now, right? But how's anybody making anything make any sense other than with a whole pile of cash right now? Like, does a normal house, like prices haven't come down enough for a 6% mortgage?
A lot of VTBs out there right now. Like almost every deal that I'm seeing, like all the commercial multifamilies are coming with or assumable mortgages.
But what about just houses? Like, is that not happening the same thing in houses? Like everything's tightening up.
No,
because prices. Well, so
in the 80s and 90s, that's like assuming the mortgage VTB, like my generation of realtors, like we never learned those things. They weren't a big part of the deal. But back in the 80s and 90s, like that's what you did. You were like, you got a mortgage. Like, what are the mortgage terms? Like, I'll take over your mortgage. How much is it? 14%. Wow. By God, give it to me. Right. And so you'd learn how to do VTBs more and stuff like that. And I think that environment will exist. And the people who are more creative will be more successful because that's going to be necessary.
How are houses penciling out for people? Like, how's somebody going into a $1.2 million house now with 200 grand like they used to and getting a deal done?
A $1.2 million house
or $1 million house with 200,000. Like, you can't even get that done anymore. How does the math even make sense?
The payments are just the payments are so high. Yeah.
Mm-hmm. So, but the prices are not coming down like enough to actually get the market to bottom. Or have they?
No, they haven't come down enough to.
No, and then we got to
like, I don't know. Like, I'm not. I've told my clients, I was like, I'm not necessarily convinced that they're going to come down to perfectly level off and say, okay, dollar for dollar price comes down, because like, the rates are always short term. Like, who's to say mortgage rates next year at some point? Like, who's to say? Maybe mortgage rates next year in August of next year are 3.5%. I don't know.
That would be so nice. So
maybe
nice.
like, and everyone's like, oh, that, I don't know. They could be 6%. They could be 6.5% next year. They could be 3.
Yeah, I hope they're closer to 3 than 8.
Like, I mean, if we're gonna get this recession that everyone's talking about, like, oh, world's gonna collapse, we're gonna get this recession. I mean, yields are gonna be going lower.
Didn't it feel like we were in a recession like 4 months ago already? And then now it kind of just like, it's like, Malls are busy. Restaurants are busy.
I don't know. I think we're in one.
I think we're in one too.
Christmas.
I don't.
Got to get going here.
Wait till Christmas. Everybody's saying Black Friday was a fucking dud, wasn't it? Wasn't Black Friday a big
Yeah,
dud?
I haven't really looked at the data, but that's, I mean, I don't know, man.
I
There's a
hope so.
lot
I
of-
hope it was a
I'm
dud
getting a
because I
lot
was
of
getting
black-
the same prices on Wednesday.
Well,
You
I'm
know?
getting a lot of Black Friday emails still today. So
Yeah.
I don't know what's
bought an
going
iPad.
on.
I got
so
50
Ben
bucks off.
Ben Rabideau is a good follow. He put out like a report, which I subscribe to, but like he's, you know, obviously like Canadian centric, looking at like the economic, like the GDP numbers that came out more recently, and he was like a lot of like the growth was from like inventory builds. So basically businesses like had like built inventories. And he's like, yeah, look, that helps your GDP, but like it's a net
Sitting on
negative.
Not if you
shelves.
don't
Yeah.
sell it. Like
Yeah,
now
yeah,
it helps your GDP, but what if you don't sell it?
Yeah, exactly. And we've
But-
obviously heard of all these, you know, Targets and Walmarts and everyone that has too much inventory.
Amazon, everybody.
Everybody, right? Amazon's laying off what, 10,000 people or something?
And I'm having this conversation here regularly because like we would like a new TV for the family room, and my kids and my wife are like, you got to get it now. It's Black Friday, and I'm like, no, I'm pretty sure Boxing Week will be pretty insane this year for sales. Like, because if nothing's
Yeah.
sold Black Friday, there's containers on the way for Christmas, man. Like containers on the way. And if things are slowing, look, when have you ever seen November, end of November, people firing, not hiring for the Christmas season?
Yeah. FedEx.
Everybody, or they're
Look at
getting out of the
shipping. Look
country.
at the shipping container rates. Like there's a guy, I can't remember the guy's name, Craig Fuller, I think on Twitter. He's like a shipping container guy. That's all he does. He's like an analyst or whatever, but he keeps posting like, so shipping rates basically are essentially back to pre-pandemic.
normal. Yeah.
They're back pre-pandemic levels. So they
Yeah.
went like, they just exploded higher. And now they're like full round trip.
Yeah. Get ready for
Good.
a
Well,
bunch
that's
of
good. That's a good
container homes.
Inflationary, piece of data. I mean, that's what we want to hear, right?
So
We don't want to stop hearing about supply chain issues and stuff like that or causing inflation. We want them to know exactly what it is that's putting the CPI up. So
We haven't
Yeah.
even seen supply chain issues because at some point something with Taiwan is going to happen. That's going to no, but there's
with
something.
certainty,
No, but come on. There's too much at stake in this one little
China
island.
doesn't go to war like that though. Like it's kind of like they just do
Everybody-
things. They just do whatever
everybody
they
wants-
want in their own way.
Everybody wants the microchips, man. Everybody wants control of those microchips. They're like 95% come from that one little island. Like our entire Western civilization is based off of that island.
Mhm.
Like that will have ramifications in the next 5 to 10
I think the
years.
state said that they're going to start doing chips.
Yeah, but you know how long it takes and how much money it takes to start one of those factories up?
Yeah,
Good
happen.
luck.
Gonna happen.
Where
So
are
we've got to get to our contest giveaway.
Yes.
How do we
Oh,
want to do this? Do you want to like share a screen?
I
Do you want me to
kinda
read
do.
them? What do
I'm
you want
get-
me to do?
Yeah, why don't you read them? Steve, you're going to have to listen intently here.
Oh no. Okay.
Me
gonna
and,
be
me
as
and TK
dramatic
will
as
go
possible.
back and forth with these. Okay. So you can do the first one, TK, from Alessandro C. Do you have it there?
Yeah, just it's on my phone. So
If you're still watching, all three of you like
Alessandro
right
C.
now. Come on, you
All
sent
right.
this to me, TK.
So Alessandro C. His comment, and we asked them, Steve. I said, whoever can make the funniest comment would win. But your criteria on who you choose, it's up to you. But that's just why
Oh,
some
no.
of these came through.
Okay.
And he said affordable housing. And I got his joke first.
I got his joke too. He kind of
Right?
ruined it with ruining
was
the punchline.
I was born on a Friday, but I wasn't born yesterday. So then he said in his reply, "That's my funny comment." All right. So there's Alessandro. He's
I would
been
take
around for
away
a while.
if I was the judge, I would take away points for ruining the punchline.
Well, he's in there. He made top 5. He made top 5.
Okay.
All right. And then
We have Munkazir Rab, who says,
Monkasur Rab.
yeah, Ryerson economics student interested in grabbing a drink with you smart gentlemen.
He got points for compliments and locational
I think-
strategy. That Ryerson's right by Hockey Hall of Fame. And so most likely he'll show up.
I
So
think he was
he's-
trying to be funny though, maybe.
No, he's going to
I thought we
Ryerson.
were supposed to be funny here. I don't
Okay,
know.
it's up to you. I'm just saying. He made the list. Okay, he made the list. Now, Darnell Beezer, he had 2 comments. So I'm going to read the one first. Did you hear about the last remaining unit in the apartment building? it was last but not least.
Boom.
And then how does a dual agent sleep? Well, first he lies on the one side and then he lies on the other side. I thought that was good. All right, Donnell.
Not feeling it.
My weekend highlights consist of this podcast and Looney Hour. Would love a ticket to the live show. Been watching your pod and commenting since the beginning. So he got some loyalty points. That's Andrew G.
That's all you got, TK. There was nothing funny in there.
Well, these were the best ones. This is what I got to go with. Steve gets to choose. Rocco Opadesano.
We have another one?
Long-time listener. First time commenting. Let's go Looney Hour at the Hockey Hall of Fame! ! I'm from the T-Dot. Pick me, please. P.S. Great content as always, gents.
These don't sound funny at all, TK.
This is what they are. There's four entries and two comments from
horrible.
one guy. Yeah.
Is anybody, hold on, all of them were humans though? We don't have to worry about who's going to.
Oh, this is what we're going to do. We're going to do a list. You're going to give us number 1, number 2, number 3, because we'll give number 1 a certain time to claim his prize. And if he doesn't comment, then we'll go to number 2.
We'll just scalp it out front.
Let's see.
Let's go with the affordable housing guy.
Yeah.
I mean, I think
Alessandro is our winner.
That was the best by a mile.
He's the only one that's had a joke in there. So we got to stick with the rules are rules, man.
Who's number 2?
If you look at it like they were actually trying to be funny,
Some
of them were funny.
Like he's a frequent commenter, so he's been around.
Number 4. I think with the last guy, number 4 would be my number 2.
How does the dual
my weekend highlights
sleep
consist of the podcast and Looney Hour. Would love a ticket to the show. That's Andrew G. So Andrew G, you're number 2. If Alessandro doesn't confirm, you will be the next one to get the call. And then our third place winner, Steve.
Third place is Darryl. Darryl gets another ticket.
I get the extra ticket.
Darryl. Okay. Darryl, you get the extra ticket.
I have lots of good comments, and some of them are funny, TK. I think that's a deserved.
So we got two.
I'm on the podium. I'm on the podium.
Yeah, you can use that. You can use that second ticket to get a second free drink.
That's right. Oh, see, intrinsic value in having the extra ticket.
Congratulations, Alessandro C. Steve, we really appreciate you joining us. We're happy for you, all your success, and the Looney Hour live show, amazing. And if anybody, I don't know if it's on StubHub or you just want to wait outside and catch a glimpse of it, check it out, or at least tune in, subscribe to Steve's channel, and try to get tickets for the next show. Maybe it'll be at the Rogers Center or the Scotiabank Arena the next time.
Oh God, I don't know about that. It's fun, man. We're having a good time, and like I said, we're learning as much as anyone. We're always, I think you should always be learning, and yeah, we don't have all the answers, but we're just trying to, be a spot to have that dialogue and hopefully have some thoughtful and entertaining conversations. But yeah, no, so this has been fun too, man. I'm always learning from both of you guys. So
thanks,
appreciate
Steve.
it.
TK,
hey,
I thought we finally got Steve Saretsky on the show. We're going to get some answers. This is what I thought coming into today, but as usual, another brilliant mind stumped by the Canadian Real Estate Show. We do not know what to expect next, but we did have a good time, as usual.
And we know where to find him on December 1st to ask him more questions.
Did I say second before? Is it the 1st?
I think it's
December 1st.
Yeah, December 1st. I'm looking forward to it. I can't wait to see some fans that think I'm a complete idiot there.
Yeah,
and I'm sure they'll tell me. Yeah, they'll tell me.
There'll be a lot of them.
I can't wait. I'm going to wear a shirt. Says,
I love it.
I'm an idiot.
I'll kick you either way. Don't worry about it.
Thank you, Mr. Saretsky. A pleasure.
Thanks for having me on, guys. It's been fun.
Looking forward to seeing you next week, pal.
Likewise.